If you receive Social Security, one government document you probably haven't looked at could be quietly costing you money every single month, not because your benefit was denied, and not because Social Security created a new rule. Your monthly check is only as accurate as the earnings information used to calculate it. If part of that information is incomplete or incorrect, your benefit could be lower than it should be without you ever realizing it. Here's the part most retirees never hear. The answer isn't buried in complicated paperwork, and it isn't hidden behind an expensive lawyer. It's inside one free government document that almost every Social Security recipient can access. But simply opening that document isn't enough. There's one section that almost everyone skips, and that's the section that can tell you whether the earnings used to calculate your benefit actually match your working life. In today's video, I'll show you exactly what that document is, where to find it, the one section you should review first, who is most likely to discover a problem, and the simple steps to take if something doesn't look right. Because spending just a few minutes checking this could give you something every retiree wants: the confidence of knowing you're receiving every dollar you've earned. So, what is this document? It's called your Social Security Statement. Inside that statement is a section called Your Earnings Record Squares. Millions of Americans receive Social Security benefits every month, but many have never looked closely at the information those benefits are actually based on. Here's why that matters. Your monthly Social Security check isn't calculated from what you remember earning during your career. It isn't based on your last employer, and it isn't simply an average of every paycheck you've ever received. Instead, your retirement benefit is calculated using the earnings history connected to your Social Security record. That means the accuracy of your monthly benefit depends on the accuracy of that record. If part of your earnings history is incomplete or incorrect, the calculation may not fully reflect your working life. Think about it like building a house. A beautiful house still depends on a solid foundation. If the foundation isn't right, everything built on top of it is affected. Your Social Security benefit works much the same way. The foundation is your earnings history. If it's accurate, your monthly benefit is much more likely to reflect the work you spent decades doing. If it isn't, it's worth finding out why. That doesn't mean most retirees have a problem. In fact, many people review their statement and discover everything is exactly as it should be. But here's the key point. Until you review your own earnings record, there's simply no way to know whether the information used to calculate your benefit matches your actual work history. That's why this document is one of the most valuable retirement checkups you can make, and it doesn't cost you anything. If you've never looked at your earnings record before, you're probably not alone. Properly, and Tiavo says, before today, did you know this record plays such an important role in calculating your Social Security benefit? Let me know in the comments below. .sts. And, if you're finding these explanations helpful, consider subscribing. Every week we break down Social Security, Medicare, and retirement topics in plain English, so you can make informed decisions with confidence. There's something else that surprises most retirees. Even after learning how important this record is, very few people know the hidden rule the Social Security Administration uses to calculate retirement benefits. Once you understand that rule, you'll immediately see why reviewing your earnings record is so important. Here's the part most retirees never learn. Social Security doesn't calculate your retirement benefit using every year you worked. Instead, it looks at your highest 35 years of earnings that appear in your record. Those years become the foundation for calculating your monthly retirement benefit. Now imagine one of those higher earning years is recorded incorrectly, or doesn't appear the way it should. That 1 year can affect the calculation used to determine your monthly check. Now, that doesn't automatically mean you'll receive less money. The impact depends on your own work history and the specific earnings involved. But it does explain why reviewing your record is so important. Let me give you an example. Margaret retired after more than 30 years working for a local school district. Like many retirees, she assumed the monthly deposit arriving in her bank account had already been calculated using a complete and accurate work history. One afternoon, she decided to review her Social Security statement for the very first time. As she looked through her earnings record, 1 year immediately caught her attention. The income shown was much lower than she remembered earning. Her first thought was simple. Maybe I'm remembering it wrong. So she pulled out an old tax return and compared it with her statement. The numbers didn't match. Now, that doesn't automatically mean someone's monthly benefit will change. Every situation is different. The important lesson is much simpler. Margaret would never have known there was a question worth investigating if she had never reviewed her earnings record. And that's true for every retiree. Checking your statement isn't about expecting to find a mistake. It's about confirming that one of the most important financial records in your retirement accurately reflects the work you spent decades doing. So, who should pay the closest attention? There are 4 situations that appear again and again when retirees review their earnings history, and one of them surprises almost everyone. By now, you understand why your earnings history matters. The next question is just as important. How do you know whether it's worth taking a closer look at your own record? The truth is, most retirees will review their statement and never find a problem. But over the years, a few situations have come up again and again. If any of these sound familiar, it's worth spending a little extra time reviewing your record. Let's start with this. Did you work for several different employers during your career? Every time you changed jobs, your earnings had to be reported and matched to your Social Security record. Most of the time, that happens without any problems. But if you've worked for several companies over the years, it's worth taking a closer look to make sure everything appears as you remember it. Here's another situation. Were you ever self-employed, or did you own a small business? Self-employment income follows a different reporting process than traditional payroll jobs. That doesn't mean anything is wrong. It simply means those years deserve a careful review. Now think about this. Did your legal name ever change during your working years? Maybe you got married. Maybe you got divorced. Or maybe you changed your name for another reason. Most name changes are reflected correctly. Even so, it's still worth confirming that every period of employment appears where you expect it to. And there's one more situation many retirees overlook. Think back over your career. Was there one year when your income was much higher than usual? Maybe you received a promotion, worked a lot of overtime, changed careers, or had your best earning year. Those years often have the greatest influence on your retirement benefit. That's why it's important to make sure they appear accurately on your statement. Now remember, none of these situations automatically mean there's a mistake. They simply help you decide where to look a little more carefully. And once you know what to look for, reviewing your record becomes much easier than most people expect. So, what should you actually do if one of those years doesn't look right? Let's walk through it together. So, what should you do next? The good news is that checking your earnings record is much easier than most people imagine. Start by visiting ssa.gov myaccount and signing in to your My Social Security account. If you haven't created an account yet, don't worry. The process is straightforward. Once you're signed in, open your Social Security statement and go directly to your earnings record. Now take your time. You don't need to understand every number on the page. You're simply looking at your work history one year at a time. Ask yourself a few simple questions. Do the years generally match when you remember working? Is there a year that seems much lower than you expected? Is there a year missing altogether? Were you self-employed for part of your career? Did you change your last name while you were working? Remember, you're not trying to prove there's a mistake. You're simply checking whether your work history matches the information on your statement. If everything looks accurate, that's great. You'll have something many retirees never take the time to gain. Peace of mind. You'll know the record used to calculate your Social Security benefit appears to reflect your working life correctly. But if something catches your attention, compare that year with any records you still have, such as old W-2 forms or tax returns. There's another reason not to put this off. In many situations, the Social Security Administration has deadlines for correcting earnings records, although there are important exceptions depending on the circumstances and the evidence available. That's why reviewing your records sooner rather than later is always a smart decision. If you have supporting documents, such as W-2 forms, tax returns, or other employment records, they may help if you ask the Social Security Administration to review your earnings history. And if you no longer have those documents, don't assume you've reached the end of the road. Contact the Social Security Administration and ask what records may still be available and what documentation they recommend for your situation. If a correction is appropriate, they'll explain the next steps and review the evidence you provide. The important thing is not to ignore something that doesn't look right simply because it feels complicated. Most retirees only need a few minutes to determine whether everything appears in order, or whether it's worth asking a few more questions. And that's one of the simplest financial checkups you can make all year. Before we finish, think back to why you clicked on this video. You wanted to know whether one document could explain why some retirees may be receiving less than they've earned. Now you know exactly which document to check. You know which section deserves the closest attention. And you know what to do if something doesn't seem right. So sometime this week, log into your My Social Security account and spend a few minutes reviewing your earnings record. If everything looks accurate, you'll have peace of mind. If something raises questions, you'll know it's worth following up instead of simply wondering. And that's always better than finding out years later that you wish you had looked sooner. One document, a few minutes of your time, and a much clearer understanding of how one of your most important retirement benefits is calculated. In our next video, we're going to cover one of the biggest Social Security filing mistakes. One that can permanently reduce lifetime benefits even when your earnings record is completely accurate. If you want to make sure you're protecting every dollar you've earned, click the video that's on your screen right now. And before you go, I'm curious, had you ever reviewed your earnings record before watching this video? Let me know in the comments below. If you're new here and you'd like more practical explanations like this, consider subscribing. Every week, we break down Social Security, Medicare, retirement benefits, and other important government programs in plain English. No confusing jargon. Just clear information to help you make informed decisions with confidence. Thanks for watching. Take care, and I'll see you in the next video.